The runaway inflation and currency devaluation seen in Kenya last year has been brought under control. The country is now preparing for elections at the end of the year, and everyone will be hoping to avoid the violence and the bloodshed that followed the disputed elections between Raila Odinga and Mwai Kibaki 5 years ago. Fresh from a trip to Nairobi and here to discuss the prospects for the country is Sven Richter. And I was saying we're both in the same camp. I was in Nairobi last week, so we can exchange stories. I'm sorry, we don't mean to exclude you on this. The overriding theme is of course, the build-up to the election now, and let's start with that. Are we going to avoid any bloodshed?
Well, there's no 100% guarantees in this, but everyone that you speak to is confident that the elections are going to be trouble-free this time, and that they point to a number of things. They point to the new constitution, which devolves power. Instead of having an all-powerful president, you now have a president and a prime minister, so everything is not evolved into one job. They point to the fact that the incumbent will not stay in, but so there's less likely that the incumbent carries on to hold on to power. They point to the fact that the International Court of in The Hague has been having issues with these things, so there's repercussions if something happens. And they also point to the fact that whichever party wins, they believe that Kenya is on a path of growth, and the operations and improvements that have happened within the government have become entrenched. So these are all things why everyone there thinks that everything is going to be fine. However, while everyone does believe everything's going to be fine, people do realize that there is a small chance that something could go wrong. They don't think it'll be a big issue, and you find that in terms of operations, people have held back a little bit in terms of new expansion. And this is not longer term issues, like for instance a new hotel that's been built, a new office block that's been built that's 20 or 30 stories high. Those are continuing. But someone says, well, am I going to start my new plant in January or February next year? Am I going to wait a couple of months just to make sure nothing
Am
else?
I going to start my advertising campaign on CNBC Africa now, or do I delay until after elections? I heard a lot of that.
Sven, just to ask, I mean, the elections were disputed the last time, and they were also very close between Kibaki and Raila Odinga.
Yes.
What's the sort of feeling on the ground around which way the elections are going to go? Are the two candidates still polling for the presidency this time?
Yes.
And what's the sort of consensus on the ground in terms of who might win this election?
There's actually no consensus of who will win. They say it's going to be very close, and it all depends which candidate successfully forms an alliance with the sort of third or fourth biggest sort of electoral or voting bloc that there is. Voting to a certain extent is still done along sort of your ethnicity lines. So each candidate has drawn in their own ethnic group into the mix. They sort of roughly of equal size. They sort of have equal attraction to everyone. So it depends who does the right deal at the right time. And that's going to be what swings the election one way or another. But most people are fairly comfortable with that, because they said whoever wins, they believe that the things and the improvements we've seen within Kenya are on track, and we're not going to have a problem in terms of the growth that we've seen in Kenya. But they say who wins, too close to call at this stage.
Just going back to what happened last year, what triggered this crisis that we saw the runaway inflation and the currency devalue in response to that? Was it external factors that affected the country, or a bit of a mix between internal and external?
A little bit of a mix, but I'd say the biggest culprit in that was really that Kenya is a country which, as it grows, it needs to import more. So it tends to have a current account deficit, and that current account deficit is what triggered the imports, a lot of imports. Those imports were higher priced. You had some problems with maize price at that stage, which went up, and the maize is very important into all the food baskets within the country. You also had oil prices that have moved up, which is another important contributor. So those two things sort of triggered, then a few things leveraged on top of it. Then the central bank was a bit slow to respond when they should have responded a bit earlier, so they had to be a bit more drastic when they did respond. So all of those things is what created that runaway inflation at that particular point in time. But that has come down very nicely. And one of the things we've seen, for instance, a bank like Barclays has said, we are now starting to lend again. We see that inflation's come under control. We think the situation's better. And despite many people saying we don't want to advertise on CNBC right now, Barclays is saying we can start lending again.
Absolutely, and everything seems to be picking up again come February, come March.
Yeah.
Let's just chat about the stability of that economy if we see another blow up in the global financial environment, because it was hard hit in the financial crisis, and what the indications are now that it is on a stable footing. One could possibly go that far.
Yeah, we do think so. And also if we have a look as to see where most of the exports these days for a place like Kenya go to, less and less are going to Europe, more are going to places like Asia. So if we have more problems in Europe in general, Africa is a little bit shielded from this. So
there's
we're
better
comfortable.
diversification.
There's much more better diversification in terms of that. But if there's a blow up internationally, everyone does get affected. It's just that these newer, faster growing countries in the frontier markets get affected less than the older developed countries. But there is still an effect across the board.
Sven, we've got an incredible emerging consumer story in Kenya. We've also got some banks there that, in terms of innovation and technology, have almost been world leaders. I think of Equity Bank and some of the products they've developed in tandem with Safaricom,
Yes.
in terms of M-Pesa and some of those things. Just take us through the indigenous banks in Kenya, if we can call them that, and some of the real success stories that you're seeing there.
Yes. Well, I mean, I think, the big three indigenous banks, the Equity Bank, as you said, Co-op Bank, and also Kenya Commercial Bank, KCB Bank, are very attractive banks, and they have really moved at forefront of what's happened in terms of the world, in terms of lending to low-income people, and also in terms of the agency model that they've created. I think that if you add all the agencies up between these three banks, there's probably 7,000 agents in Kenya now for the various banks. They're now getting to a stage where some of the bigger agents are starting to become dual agents for the various banks. So you can go there, you can open an account. Obviously, the forms have to still go to a bank branch and then come back to the agency. You can make deposits. They're starting to work out how to make loans through those agencies as well. Not that the agencies will approve the loans, but they are contact points. And it's very interesting that by doing that, they've opened up their access to financial services so much more.
It's not overcrowded, though, the banking space in Kenya, or is it?
No, I don't think so. I mean, they've got about 40 million people. They've got sort of 5 big banks, your Standard Chartered's, your Barclays,
KCB,
and then your 3 indigenous
Equity.
ones. And then the others as well, but they have more niches in being sort of mass service banks. So we don't think so. But also a number of those banks, KCB, Equity Bank, Co-op, are all in the region. They're not only in Kenya, remember. They have expanded quite dramatically into other countries as well.
So in terms of this agency model, as you refer to it, where you've effectively got people acting as your agents to go and open accounts, are these people taking deposits as well? How does this actually work? Is it just a sales force? Or is there an administrative function behind that as well?
They can also take deposits, but the deposits are straight along immediately passed on to the bank. I mean, the agent doesn't hold any deposits determinately. They are just a conduit to the bank. The people who do take, well, it's debated whether they take deposits or not is Safaricom, okay, with M-Pesa, as you mentioned, because when you go to and take out M-Pesa and I give some money to you to be transferred to someone else, okay, that does build up a float. So it's not a deposit as such, but it is a deposit because there becomes quite a large float in terms of that. So these agents will have a certain float as well, but they're not strictly deposit-taking institutions. And they are regulated by the central bank that does check them.
Just looking at the telecommunications environment, you mentioned Safaricom, and as you arrive in Nairobi, Safaricom all over the airport, and I think often that's it gives you a good indication of what brands are dominant in territory or in country. Airtel, how is that company doing in relation to Safaricom?
Well, I saw a report the other day that said Safaricom, the winner of the price war, okay, and remember, this wasn't a price war that they started, it was a price war that Barty started when they came in. And it's almost like they chose Kenya as the sort of experiment in terms of everything else in Africa, because they chopped rates dramatically in Kenya. And yes, Barty gained, they did get users, but not as many as you would have expected. Now, Safaricom had to reduce their rates, but they never reduced them as much as Barty reduced them. And even Barty, a lot of the rates that they gave were not permanent. They were on special offers all the time, so if they needed to, they could pull them back.
Do you think Bob Collymore is the right man to be heading up Safaricom?
Yes, I think he's doing a good job.
How long has he been in play now?
About 2 years, I think, now. Yeah.
Aside from, obviously, we've talked about this emerging markets consumer story quite often on the show. There's now this new development around oil and gas and shale on the east coast of Africa, off the east coast. The last I heard was that African Oil had found oil on mainland Kenya. Yes. Tell us how that story is progressing in Kenya.
Well, it's still to a certain extent unknown, because they've discovered oil, but they don't know how much oil there is, and it's obviously a long way from being commercially viable. But the interesting thing is there's a good likelihood that there is either gas or oil, and that will create a large opportunity for Kenya. When we talked about last time that they were growing, they had to import more maize. They might still have to import maize, but they're also going to start importing oil as they grow faster again. The problem now, of course, if they import oil, is they have a current account deficit. So if they have their own energy resources, whether it's gas, whether it's oil, that will provide them going forward a tremendous boost in an ability to control inflation going forward. So very, very positive, not just for them, I mean also for Tanzania as well, which is also looking to find some oil as well.
So it's still very much an emerging story there, but something that could aid industrialization going forward.
Substantially so. The interesting thing about Kenya, if you look at their electricity supply, they're probably the greenest nation in the world. I mean, most of their electricity is either hydro or geothermal. It's quite an unusual nation in terms of what they use to produce their electricity. But if they find gas, of course, they can use that to quickly and cheaply also produce more electricity, which will mean they can industrialize more as well.
Rwanda.
Yes.
There's much talk of how easy it is to do business in Rwanda. Obviously, it's got accolades from the World Economic Forum, competitiveness surveys, etc., etc. What are your thoughts? Have you been in country?
Yes, we have. I mean, it's night and day compared to what it used to be. It's like the Switzerland of Africa. It's fantastic. It's never going to be a huge investment decision because it's a small country. You know, when you look at Kenya with 40 million people, Rwanda 2 or 3 million people. So there's always going to be a limited consumer opportunity in terms of Rwanda. So they're going to develop to a certain level, and when you go there, everything is ordered and smart compared to some other countries. So done a fantastic job, wonderful. We sort of hold it up as a gleaming beacon, sort of as to what.
But are you saying the opportunity is over?
It's not over, but it's at a lower rate than in a place like Kenya because it's never going to be as big, and so much has already happened there. But it's still a frontier market. It's still early stages. There's still opportunities, but the opportunities are not as big as Kenya. I mean, if I was let's say I was a Tiger Brands or something, I was saying, well, which country am I going to put my first plant in, Rwanda or Kenya? I'm choosing Kenya because I've got 40 million people I can sell to. Rwanda's got 3 million people I can sell to.
Just on the back of that, you talk about where some of these food brands and food manufacturers might set up shop. Kenya's been a fantastic country for agriculture and specifically some of the things like coffee and
yes.
tea. Are investors able to get access to those types of agricultural plays in Kenya? Because we're very starved of them on the JSE. So is that somewhere we could look to a retail investor possibly investing to get exposure to the agricultural story in Africa?
Yeah, we're generally starved of them in Kenya as well. There are some opportunities. The liquidity tends not to be fantastic in terms of them. There's not that many great agricultural opportunities, which is actually quite sad because, as you say, it's a huge opportunity for Africa and it's a huge opportunity for investors, but most of them tend to be privately held rather than listed.
Where do you spend most of your time on the continent?
We have to spend most of our time in where the biggest stock markets are, where the biggest opportunities
are. So East Africa,
are.
West Africa, Nairobi, Lagos.
Nairobi, Lagos. But, you know, we also want to be in Zambia. I mean, Zambia is interesting. We visit Zimbabwe. So we visit everywhere where there's a stock market, but in a ratio probably of 2 times to 1 if you compare to, say, either Nigeria or Kenya, because those are the big markets.
I mean, surely Nigeria, the opportunity there just wipes the Kenyan opportunity off the board. 160 million consumers versus 40 million. I think I know where I'd go.
Yes and no. Yes, on face of it, I agree with you. However, remember that in East Africa, you've always had quite a developed East African community. You have Kenyan companies that are expanding. All the 3 banks that I mentioned have expanded. The cement plant is Bamburi is expanding regionally as well. So we actually tend to think of Kenya as having a population of 120 million people. Not all in country, but if you add the surrounding areas, that is the opportunity.
There we go. That makes sense.
You mentioned just one company here that I'm quite intrigued with, Uchumi. Sounds like, is that the ShopRite of Kenya?
Well, there's 2, Nakamat and Uchumi. Okay, Nakamat, you know what Nakamat stands for? Nakuti, I think it's a Kuti mattress store, Nakamat, okay. And they are really, and Nakamat is one of the companies that every investor wants to get involved in, and they've remained private, staunchly so. But Uchumi and Nakamat are the 2 that are the ShopRites of the area. Uchumi a few years back had some problems with cash flow. They expanded too fast. They tell us that they have fantastic systems in place now. They're controlling their cash flow well, and that's not going to be a problem going forward for them.